if we're going to have a panic, if we know the dollar is going to fail, we'll get the fuck out now. Because I'd much rather buy Bitcoin at 70,000, a coin than at 700,000 a coin. I mean, they're both going to protect you, but I wish I'd been max. I wish I'd been buying it at $2 a coin.
The core issue at hand is the stability of the US dollar, particularly when measured against gold and Bitcoin. According to Lepard, these two assets serve as crucial indicators of the dollar's health. If Bitcoin reaches $500,000 per coin and gold rises to $10,000 per ounce, this signals a failing dollar. Surprisingly, despite a decline in gold exchange-traded fund ETH purchasing, the price of gold remains strong, even hitting new all-time intraday highs. The decline in gold ETH demand has been overshadowed by a rapid increase in Bitcoin ETH popularity, suggesting a significant shift in investor sentiment. However, despite these trends, the price of gold has not plummeted. Instead, other countries are increasingly turning to gold as a neutral reserve asset, recognizing that holding onto US dollars is becoming a losing proposition. Nations such as China and Japan have been net sellers of US Treasury bills over the last 6 months, reflecting a broader movement away from dollar-denominated assets. This trend shows a global reevaluation of how to store value, with many countries favoring gold over the US dollar. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The real issue with the dollar across to gold and the dollar across to Bitcoin. And those are the two clues that tell you, if Bitcoin's at $500,000 a coin and gold's at $10,000 an ounce, well, guess what? The dollar is failing. What's very interesting to me is the gold price has been very strong in spite of the fact that gold ETF purchasing has gone down. The Bitcoin ETFs have eaten gold's lunch, right? Bitcoin ETFs have gone from nothing to being substantial in size. Gold ETFs have been shrinking the whole time. Okay, you look at that and you would think to yourself, well, the price of gold should be going down, but it's not. Yesterday the price of gold traded at a new all-time intraday high at 2458 or something. And the reason for that is that other countries are using gold. They are using gold as their neutral reserve asset. They realize that having the dollar as a neutral reserve asset is a losing proposition. In other words, they're very much like the French were in '71. They can see the problem that we've got, and they're thinking, oh shit, I'm not hanging on to these things. I'm not buying any more treasury bills. In fact, I'm selling treasury bills. And China and Japan have both been net sellers of treasury bills the last 6 months. Other countries doing the same. And most people, I think, are just saying, if I'm going to try and store value, maybe I ought to do it in gold. Sadly, and maybe some countries are doing it in Bitcoin, but I don't think at the sovereign level other than El Salvador and maybe some countries in the Middle East. But it's still pretty early days at the sovereign level from what I can tell. Now, that's why what Loomis said and what Kennedy said and what Trump kind of said, but he didn't really understand what he was saying, that having Bitcoin as a strategic reserve, that's why that's so goddamn important. And I don't think any of them really fully understand what that means, but they've been orange pilled and they're coming to get it. And basically, as Saylor laid out in his speech at the show, if the U.S. were to go maxi on printing fiat, if the U.S. were to adopt the MicroStrategy playbook, which is to say if they were to print fiat and use it to buy Bitcoin, that would be a very good thing for the U.S. people. I'm glad Trump embraces Bitcoin, not even understanding it. It's all good, but in terms of actually having something happen as a result of that, I think the odds are quite low. If it did happen and they became they got on the bid for it and started buying it, it's going to push the price much higher. And you want to talk about what's going to cause the dollar to fail? It's going to be the realization. This goes back to Gresham's law, right? Once people realize that, once the Bitcoin price crosses 100, 200, 300, 500,000, people are going to realize, holy shit, this is continuing to be the best performing asset in the world. How can I not hold this? And more people are going to buy it.
Lepard points out that when a government begins printing money to cover its debts, it sets off a chain reaction that can ultimately lead to hyperinflation. Gresham's law again comes into play here. Once everyone realizes the government cannot stop printing money, they lose faith in the currency's value. Hyperinflations occur when this loss of faith becomes widespread, and the US is inching dangerously close to that point. Many Americans already recognize the inflation problem, and the smartest ones understand that the only solutions involve either significant inflation or a complete economic collapse.
If suddenly the government says, all right, we're going to balance the budget, we're going to means test Social Security, we're going to raise the retirement age, we're going to close all the military bases, we're going to stop sending money overseas, and we're going to completely balance the budget so that we're no longer running a deficit and we don't have to print money, well, okay, then suddenly having sound money isn't going to be as important. And the price of Bitcoin is not going to go up as much, and the price of gold is not going to go up as much because the dollar won't be being debased as quickly. But, as you were smiling as I said that, because we all know, what are the odds of that happening, right? I mean, they would seem to be pretty low. They seem to go on, they're either low or they're zero. So, as we all know, when they run a deficit, they have to pay for it. To pay for it, they have to issue debt. And somebody's got to buy that debt. You got to find a sucker at the card table, as Broman says. And so, and in the past, it was a petrodollar, and originally the Saudis and all those guys would recycle the debt, and then it became China, when we let them into the WTO in exchange for them buying the debt. But all those guys aren't buying the debt anymore, and so, what happens is we're having a hard time finding buyers for the debt, and what that means is that intrinsically interest rates go up, and if interest rates go up, then that makes the deficit larger. And the deficit being larger means you got to sell more debt, but selling more debt makes the interest rates go up more. So you can kind of see where I'm going here. It's rinse, wash, repeat until the whole damn thing blows up. And and this is not that unusual. I mean, if you read Dalio's Debt Crisis book, if you read Reinhardt and Rogoff and a number of other books about this, I mean, this has happened in many countries. I mean, this has happened in Venezuela. This has happened in Zimbabwe. This has happened in Brazil multiple times. It's happened in Argentina. It's kind of happening now in Turkey. I mean, countries that can print currency, this is the fundamental problem, right? If they start to incur debts, originally the debt's productive, but eventually it becomes less productive, and then they have to issue more debt to pay for the old debt. And it's like a family that's taken out new credit cards to make the payments on the old credit cards. And eventually, somebody said, well, we're not giving any more credit cards. And in this case, the powers that be that are running the system, though, they kind of think, well, we can just, it's not a problem because we have a printing press and we can always print the money. But, what the caution I would say to that is Gresham's law says that once everyone figures out that you can never stop, they're not going to think the money is money good. And so if you study the history of hyperinflations in other countries, they occur when everyone loses faith. And we're getting really close to that area right now. I mean, I think there are very few people in the country who aren't aware that we have an inflation problem, and I think the very smart people in the country are really aware that it's probably not solvable without a lot of inflation or a complete collapse. I think there's some portion of the population that thinks, well, okay, fine, but I'll believe the narrative; it's going to get better. But here's the I was trying to be an optimist earlier. Here's the pessimistic side of this. It's not going to really get better anytime soon. And in fact, there's going to be a real painful period here as it gets substantially worse, in my opinion, in the next 5 years. So, and what it does, what all the money printing does is, I mean, it helps by suppressing the inflation. The productivity helps by, we should be seeing lower prices and everything. We're not. They're actually going up, and they're stealing the difference between how much they're going up and what they should be on the going down thing. The other thing that happens is with the money printing is it doesn't necessarily always go into the consumer products. It tends to sometimes goes into the assets, and this is what's created the quintillionaires. And this is actually the same thing happened in the 1920s, where one of the reasons why the Fed was so loose and why they let the 1929 stock bubble get to where it got to was because they didn't have consumer goods inflation. The reason they did, but they didn't look like they did because they had so much productivity improvement happening that that they were therefore running a low inflation number, but really the inflation number was, in my view, the best measure of the inflation number is just money supply growth. I mean,
Yeah.
If you really look at money supply growth, that's your inflation number, right? Forget what the CPI says. That's cooked.
Lawrence Lepard's analysis paints a stark picture of the future for the US dollar as faith in fiat currencies continues to erode. With gold maintaining its value despite lower demand for gold ETFs and Bitcoin gaining traction as an emerging store of value, it is clear that a global shift is underway. Countries are moving away from the dollar, seeking alternatives that offer more stability and protection against inflation. As Lepard notes, the US government faces difficult choices: continue down the path of debt and deficits or take drastic and unlikely steps to balance the budget. Without meaningful action, the dollar risks further devaluation, while assets like gold and Bitcoin stand to gain. The lessons from history are clear: hyperinflation and loss of confidence in a currency occur when governments overreach with debt and money printing. Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights on investment strategies and financial tips. Leave your questions and comments below. I'd love to hear from you. See you in the next video.